Welcome to the Capital Exchange. I'm Steve Wilbur, Managing Director at Allen Capital Group.
And I'm Travis Portwood, Chief Investment Officer with Allen Capital Group.
Travis, we talk about inflation a lot lately, and we're seeing it in many places these days, like goods that we're buying, services that we're using, and when you go to the gas pump to fill up your vehicle.
We are.
Now, ask anyone that has been trying to buy a house lately, and you know they're seeing inflation in home prices, aren't they?
Yeah, absolutely, Steve. As of July, at the end of July 2021, the median home price, according to the National Association of Realtors, was $359,000 in the United States. In the Midwest, it's somewhat lower. It's around $300,000. But that is still an 18% increase in the price of homes from the same time last year. We know costs to build a home have moved up, but consumers are also flush with cash. You combine that with low interest rates and then the limited supply we have, and you have a red-hot housing market.
You know, Travis, as demand increases, terms for buying houses have eased substantially. We're seeing all cash deals. There's no inspections, and these houses are going on the market and they sell in hours or less, and some of them don't even make the market. There are a lot of buyers out there that haven't gotten the opportunity to actually purchase a house, and they're suffering from what they call buyer's fatigue. So they're sitting on the sidelines taking a rest. Some of these potential home buyers have sizable amounts of cash sitting there waiting to put that money down on the home that they want. Now, they have another dilemma, don't they? What should they do with all of that excess cash?
Yeah, Steve, that is a dilemma, but the answer isn't so simple. You know, as with all investing, it's all about trade-offs. You know, your decision depends on your time frame and the dollar amount we're working with. If you have just the minimum amount needed to make the down payment on the size of house or the cost of house you're considering, and you want the ability to strike quickly should an opportunity arise, cash is likely still your best option. And I understand that is not a popular answer given where interest rates are, because cash is earning minimal, if any, type of interest in this environment. But there is a silver lining to that, or a trade-off, and that is mortgage rates are also at all-time lows. So you get to finance your home purchase at lower rates as well.
Yes, Travis, and if you're still working, you have income flowing in and you can continue to save for that down payment. If your pool of money that you're saving for that down payment is above the minimum that you actually need to purchase that house that you want, you should consider investing that excess capital or that excess money, shouldn't you?
Yeah, you should, but again, I'm going to sound like a broken record here. It's all about trade-offs. If you put your excess money or the excess down payment money you have at risk, be prepared, better yet, expect that money or that amount of money to fluctuate. And that volatility over the short term could work in your favor, giving you a larger pool, or it can work against you, giving you a smaller down payment to put towards your house. And that could force you to extend your time frame, at least with that particular bucket of money. In today's environment, there's really no free interest rate. Any incremental yield you chase or reach for comes with incremental risk, so be prepared for that.
It always comes back to our buckets of money, though, doesn't it, Travis? Or most often does.
Yeah, the bucket strategy applies to a lot of situations.
Travis, this has been great. I look forward to it next week.
I look forward to it as well. Thank you for watching this week's Exchange.
To make sure you don't miss out on future discussions, please follow us on social media.
Make sure to like and share our videos, and we'll see you next week.